First things first, do I pay taxes on day trades on Robinhood? Yes, 1000% yes you do. That's because a day trade, if you make money, is considered a short-term capital gain, and that is any asset sold for a higher price than it was purchased in less than a year. The other side of that is a long-term capital gain, which is a gain made on any asset sold in a timeline over 1 year. I'll flash the tax brackets for the short-term capital gains on the screen here, and you can see that they start at $1. So immediately with any short-term capital gain, you're paying at least 10% in taxes. I'll also put on the screen here the long-term capital gain bracket, capital gain tax bracket. So you can see that they don't start immediately. They actually don't start until you make over $39,000, and then they start at 15%. So you basically get $39,375 of long-term capital gains tax-free. What that means is you are incentivized to do long-term capital gains instead of short-term capital gains. Tax incentivized, at least. Sweet. Okay, a couple quick notes about that. One, when is a gain realized? And it's realized at the moment of sale. So if you gain $100 on a stock but you don't sell it, it's not a short-term or long-term capital gain yet. It is only realized the moment you sell it, and then it is subject to taxes depending on which bracket it falls into or which timeline it falls into. Another note, Robinhood and probably the other brokers, but double check with yours, uses a FIFO method when selling stocks. So if you buy two stocks, the first one you buy for $100 and the second one of the same company that you buy for $150, and then 10 days later you sell them, or sell the first one for $200, you're realizing a gain of $100 because you're selling the first in stock, it's the first one out the door. Then if you sell the next one later, you'd be selling that second stock, obviously. Last note is that short-term capital gains add on to your current income in terms of what you pay taxes on. So if you already make $42,000, say, and then you have $7,000 in short-term capital gains, you'd think you'd be in that first tax bracket, but since you already made $42,000 of baseline income, you actually pay 22% in terms of taxes on that $7,000 of short-term capital gains. That's another bummer about them, and it's why day trading is somewhat frustrating in terms of its tax burden. Bang! I recorded that. Nice. I hope that helped. I hope that answered your questions if that's what you were looking for. And if not, feel free to drop a comment below and I'd be happy to see if I can answer anything else beyond that. And in the meantime, I'll have some links down below for a little bit more in terms of the explanation on these. Investopedia is a great resource for this, so check that out. And I'll see you next week.